So the question is how to make profitability for a service company or for an e-commerce company. In other words, how will profitability of a e-commerce company or a service company be different from the profitability of a manufacturing company? So the difference, of course, is very simple, not complicated at all. Now you can answer me, will a service company or an e-commerce company, will it incur any material cost? And the answer is no. Will an
Sir,
e-com
it can. In our case, for example, I'm sorry I'm taking too much time, but in our case, for example, we work with weavers and artisans, right? So we procure the fabric and then they do their artwork on it and then it comes to us and we sell it online. So
Okay,
we are into manufacturing as well as e-commerce.
very good, very good. Okay, so what you are saying is, even though you are into e-commerce, obviously you are procuring something, adding some value to it, and then selling it in the market. So what you are saying is, in your case, you will have the material cost coming in, which is perfectly fine. And since you have a material cost coming into your case, obviously you will also have the manufacturing expenses also. So in other words, your e-commerce profitability and a manufacturing profitability is not going to be different, because as an e-commerce company also you are doing some manufacturing. Okay, but in case of a service company, it may not be so. Service company will not have the material cost, and since service company does not have the material cost, so material cost will not be there. And it will also not have a manufacturing expenses also, because it is only providing a service, and therefore manufacturing expense also will not be there. So in case of a service company, the difference is going to be these two things will not be there, and that's it. And that's it. Service company will have a selling and general and administrative expenses in any case. Uh, at the same time, please remember, uh, it is not that this is strictly to be, it is not 2 plus 2 always. Because even a service company can also have a cost. Let's say, for example, a power manufacturing company. Now, power manufacturing company does not have a product, but it has a service. And the service, it is providing power. So they will incur cost in producing the power. So they may not have the material cost, but they will still have a power generation cost. So in that case, if you are talking of a service company, which is a power generating company, you will not have the material cost, but you will have a power generation cost in any case. So this is how the profitability will change in case of a service company. I hope this answers the doubt
Just
that you
one
had.
related question, sorry. So for cost of goods sold, then would it be that, you're considering the salary cost as the cost of goods sold, right? Because that
Yeah.
is the main thing that, that's the main cost that will be there for a service company.
Okay, for a service company, assuming that you have no raw material cost, assuming you have no manufacturing cost, in that case, the only cost that you have is selling general and administrative expenses. So that cost will come here. So you will not have the material cost component, you will not have the manufacturing cost component, you will straight away have selling general and administrative expenses cost.
So, but
But to the
what
question,
about labor cost of the people, like in a services industry, the people actually providing, so for example, a software, right? You
Hmm.
need the developers and the people.
Hmm.
So that is your actual manufacturing cost in
yes.
that sense.
So,
So
okay.
Sir,
where
I,
is that
I
come?
think we are getting confused here. Definitely, even for a software company or this thing, the material cost goes into the systems and the data which they consume. See, the data on a day to day basis they consume, and then they have to send the software to a customer. You have to send it through the data.
Very good. I think I'm really so glad with all the questions. I'm really so glad with all these questions. See, remember what
Because
we need.
I sell software to Europe and all.
Right.
So whenever I sell software, we take into consideration only those things. I also sell hardware. So when I take hardware, I go into manufacturing.
Okay. Now, let's understand it this way. See, what we have to understand is the concept. If we understand the concept, then rest of the things will fall in line automatically. So let's say, for example, you are a software development company. Now, your software, in case of a software development company, remember you will have two kinds of operations. One is a team which is engaged into the development of the software, and second is the team which is engaged in the marketing of the software. So the salary that you will pay to the team which is engaged in the development of the software, that salary will be part of, will be here somewhere, it will be here, and it will be known as a software development cost. Are you with me, everybody? So you will, in that case, you will not, in that case, you will not call it as manufacturing expense. You will call it as software development cost. And the salary that you will be paying to the people who are doing marketing for you, that will be part of your selling, general and administrative expenses. I hope that makes sense to you.
Yeah, very clear. Thank
Okay, very good, excellent. See, remember all of you, what is important is understand the concept. If you understand the concept, every question becomes very, very clear. So what should go into the manufacturing cost? Very simple. Any cost that I incur for converting my material cost into the finished product is my manufacturing cost. If I do not have a raw material, so then I will not have the raw material cost. But if I am into a software development, I will have a software development cost, and that cost I will need to account for here. Okay. Now let's come back to EBITDA. Now, when you talk about EBITDA, EBITDA has got significance for any business from future perspective, borrowing, and valuation. Because I'm sure I've seen the profile of all of you, and I can see there are many startups as well, and therefore you would definitely be interested in the valuation as well. So this is the question to every one of you. Number one, how do you connect EBITDA with future of the business? Number two, how do you connect EBITDA with the borrowing capacity of the business? Number three, how do you connect EBITDA with the valuations of your business? Now this is the question open to all of you, and you can answer one by one.